Good afternoon, everyone. For those of you who just joined us, welcome to our virtual business personal property statement webinar. My name is Special Assistant Field Deputy Ian Michael May, and I'll be moderating today's webinar, hosted by the Office of Los Angeles County Assessor, Jeffrey Prang. Before we begin, please allow me to break down how today's webinar will work, along with some important Zoom functions. Today, we will begin with a presentation from Principal Appraiser Frank Pavone, who will provide an overview of the business personal property statement and its importance. Next, we will have our assessor team answer a handful of our most commonly asked questions. Finally, we will conclude this webinar by answering questions from you, the audience. Throughout the entirety of today's webinar, we invite you to submit your questions via Zoom's question and answer function. Our subject matter experts will be answering your questions throughout the webinar. For those attendees who are unfamiliar with Zoom, I would like to point out a few features you should be aware of. On the bottom of your screen, you will see a check mark surrounded by a box. When you click on it, another screen will pop up where you will have an opportunity to type your question to our team. Once you submit, the question will be sent to our panelist team to be reviewed and answered. Once our team answers the question, it will reappear for everyone in our audience to see. You may submit a question anytime during the presentation. Any questions submitted by the audience not covered by our commonly asked questions section will be verbally answered during our live Q&A session at the end of the webinar. We thank you for joining us today. Now, let us now turn over to Frank Pavone for his presentation.
Thank you, Ian. Good afternoon, everyone. And like Ian said, thank you for joining us today. So today I'm basically going to give you an overview regarding the business property statement, important dates, requirements for filing. Also, at the end of this slideshow, I'm going to show you where we have our full presentation that you can go to from our website, which has more in-depth scenarios, examples, and it'll give you more detail. But let's start with the overview. If we can go to the next slide, please. Okay, so first of all, what is personal property? So personal property is all property except real estate. Taxable, tangible property, personal property is basically what we're here today. If you have a business, so this tangible personal property can be machinery and equipment, office furniture, computers, etc. So there are some non-taxable types of personal property that you might have in your business, including business inventories or things you have in your home, household goods, personal effects. So for example, something that's not taxable in terms of personal property in your business is what we consider business inventory. So if you have a retail clothing store, the actual items you have for sale, your merchandise, your clothing is not accessible by us. And then we also have non-taxable intangible property. And these things include bank accounts, liquor licenses, insurance policies. So these type of intangible personal property is not considered accessible. Next slide, please. So what gives the assessor the legal basis for property taxation? So California Constitution, Article 13, Section 1A says that all property is taxable. That includes personal and real property. Okay, but the assessor does make an adjustment for exempt property. And in general, properties that are owned and used by educational, charitable, religious, or government organizations may be exempt from certain property taxes. So if you have if you run a business that's nonprofit, then you might be exempt. But in order to be exempt, you would have to file an exemption with our department. We have an exemptions department that basically you file an application with them and they'll determine if you qualify for an exemption and possibly be exempt from property taxes. Next slide, please. So the basic responsibilities of the assessor are as follows. Our responsibility is to locate all taxable property within the county and identify ownership. Okay, we also have to establish a taxable value. So therefore, our job is basically to appraise and come up with the market value of your property, whether it's personal property for a business or whether it's real estate. In addition to that, we annually complete an assessment roll, which shows all the assessed values of property in the entire county of Los Angeles. And lastly, which I mentioned earlier, is we apply legal exemptions for those type of institutions that are not-for-profit or if they're government entities. Next slide, please. So you might be asking yourself, how do you find your business? You might have received a business property statement for the first time, and you're wondering how we got information. So there's various ways that that we obtain your information. One of them is that we actually have appraisers who canvass the county of Los Angeles. We go out and we meet with business owners. We update our information from our records, whether if a business moved in or if someone went out of business. The purpose of this is to maintain and to know who's currently in business. So that's one way is from our field canvas. And we usually handle the field canvas from August until maybe February, March. Other ways that we receive information from new business owners is through the business property statement itself. Sometimes we'll get a form where the owner tells us, oh, I sold my business, I closed down, or I actually moved from another city. So those are other ways that we get your information from the form itself. We do property tax audit. When you file the business property statement at the bottom of the form, it says that the form itself is subject to audit. So we do property tax audits. And when we do a property tax audit, it covers a 4-year period. We also get information from sales tax permits, from the BOE, business journals, news articles, industry websites. We read articles about certain things happening in the county, businesses opening, businesses expanding. So those are other methods that we get information regarding your businesses. City license records and California Department of Alcoholic Beverage Control. Next slide, please. So there are 2 occasions when a business property statement is required, and I'll go through both scenarios right now. The first one is if you own personal property and fixtures in the county that has an aggregate cost of $100,000 or more, then you are required by law to file a business property statement, even if the assessor did not request it. And the other occasion where filing is required is if the assessor sends you a form if we request it. And sometimes that happens, as I mentioned earlier, we do a field canvas and we come up on a business and it's for some reason it's closed that day, or we show up maybe before the business opens. Then we'll take down the information of the business, the name, either the phone number, the address, and we'll request a business property statement. So like I said, 2 occasions where a filing is required. If you have over 100,000 in cost, again, you have to file it even if the assessor doesn't request it. Or the second scenario is where the assessor requests a form because we need more information. Next slide, please. So when is your property taxable? So the key word here is lien date. Okay, the property becomes taxable on the lien date for the current year, which is a 2025 year. If you were in business on January 1st at 12/1, you may be subject to tax. Okay, so personal property is assessable on this date only. So let's say for example, you opened a restaurant at the end of December. Since you were there on the lien date, January 1st, you would be assessable for your equipment, your kitchen equipment, your ovens, your restaurant, your furniture and fixtures. It would become accessible. Now, on the other end, if you open a new business, maybe the second week of January, which was after the lien date, you won't be subject to tax for this particular year. Now, you might be subject to tax next year for 2026, but in terms of the 2025 lien date, you wouldn't be because you actually moved in after the lien date. So on the form itself, when you get the business property statement, make sure to declare all costs and related property information as of January 1st. Same thing, if you purchase a piece of equipment after January 1st, you wouldn't have to report it for this 2025 year. Next slide, please. So here's some important dates regarding the filing itself. on the form, on the business property statement, there's a due date at the top that says April 1st. Okay. So it doesn't have to be filed by April 1st, but if you want to avoid a 10% penalty, it should be filed by 5 p.m. on May 7th of each year. Okay. This date doesn't change. Now, if that May 7th falls on a weekend or a holiday, then the deadline is moved to the next business day. I believe this year, May 7th falls on a Wednesday. So make sure you submit your filing by 5 p.m. that day. If the filing is received or postmarked after May 7th at 5 p.m., there is a 10% penalty that's added to your assessment. Okay. And lastly, based on what you report on the business property statement, if you have an assessed value that's greater than 5,000, then you will receive a tax bill, and those go on the secured roll July 31st of each year, and the tax bills are due August 31st of each year. So in this case, for 2025, the tax bill would be due August 31st of 2025 if you want to avoid any penalties and collection costs from the tax collector. Next slide, please. So one important thing to note is that the property statement itself is confidential. Okay, any information you put on there, you know, tax IDs, costs, representatives on there, it's not open for public inspection. The only other occasion where the property statement can be viewed by others is if the owner designates someone, either an agent, an attorney, some representative on their behalf. We would be able to share that information, but we would need to have that in writing in order for us to share the contents of the property statement with someone other than the owner. And lastly, like I mentioned earlier, on the bottom of the form, there is a statement that says that the business property statement is subject to audit. We do audits every year. We audit 50% of the highest assessments in the county automatically. That's what we consider a mandatory audit. And then the other percent are up to discretion, depending on many factors. Next slide, please. So as I mentioned, this is just an overview about the business property statement. If you go to our website here, where it says webinar and presentations, you'll actually see the full slideshow, which has about 60 slides, has different examples, different scenarios. It actually shows you back in front of the form, how to fill it out, how to account for disposals and such. So if you have the time, please view our videos. There's other information besides filing the business property statements, as you can see here. Next slide, please. So thank you for letting me give you an overview. Next, we're going to go into the most commonly asked questions. We have 11 of them, and we'll go through those each of those questions individually.
Thank you so much, Frank, for that comprehensive and informative breakdown. We will now answer common questions asked by business owners. First question is, am I required to file a business property statement? For this question, we have Latoya Guillory to help us answer.
Thank you, Ian. And like Frank mentioned before, yes, there are two scenarios where you must file that property statement. The first being if you have an aggregate cost of over 100,000 in the county. So just to be very clear, that's either if you have it at one location or if you have multiple locations across LA County. If the composite total of all those locations do exceed 100,000 in cost, you must file the form. And the other scenario is if the assessor sends you one. So even if you do not have $100,000 in cost, if you received a form in the mail, you must complete it and send it back. Thank you.
Thank you, Latoya. Now moving on to question 2. When is the lien date? This will be answered by Angel Rosales.
Yes, the lien date is January 1st, 12:01 a.m.
Thank you so much. Question 3. Can we get an extension if the form is due April 1st? This will be answered by Arnold Altamirano.
Well, the form states that it is due on April 1st, but the assessor's office will accept the filing without 10% penalty until May 7. Now, if May 7 falls on weekend or holiday, the next the form will be due the next business day. Thank you.
Thank you so much, Arnold.
You're welcome.
Question 4. What if I don't file the business property statement form? This question will be answered by Arpine Gukasian.
The assessor is required by law to estimate the value of your business property and fixtures on the lien date. In addition, a 10% non-filing penalty will be added to the assessed value. And yeah, thank you.
Thank you very much. Question 5. Can I file my statement online? This will be answered by Calvin Chen.
Yes, you need two things to file your return online. One is assessment number, the other one is PIN number. But if you're the first-time filer, you might not get the PIN number assigned. So you need to either call or email to us, and our e-file team can assist you to getting a PIN number if your company qualify for e-file. And if you cannot see the PowerPoint, the phone number is 213-974-2643, and the email address is efileassist@assessor.lacounty.gov. efileassist@assessor.lacounty.gov. Thank you.
Thank you so much, Calvin. Question 6. What if I discover an error in my filing after submission? This will be answered by Chelsea Tan.
You may submit an amended filing by May 31st. Also, we suggest adding a note at the top of a statement indicating that it is an amended copy. This will help us to distinguish it from the original version when we receive it.
Thank you so much. Question 7. How do I report equipment disposals from the prior year? This will be answered by Joy Riang.
Thanks, Ian. Disposal costs are adjusted in the year the purchase was made, not in the year the equipment was disposed of. For example, if you purchased a computer in 2015 and then dispose of it in 2022, you will remove the cost of the computer from the 2015 year and not the 2022 year.
Thank you very much. Question 8. What if I disagree with my assessed value? This question will be answered by Joshua Ramirez.
Hello. So yes, you can contest your assessed value through the Los Angeles County Assessment Appeals Board starting July 2nd until November 30th of the corresponding tax year.
Thank you, Joshua. Question 9. Do you prorate the tax bill if I was only in the business part of the year? This question will be answered by Daisy Yun.
Yes, so your unsecured tax bill is not prorated even if you are only at the situs part of the year. However, if you moved in after the lien date, you would not be liable for the tax, property tax in that respective year. Thank you.
Thank you so much, Daisy. Question 10. When is my tax bill due? This will be answered by Winnie Zhao.
Tax bills are mailed out between March 1st and June 30th of each year, but become delinquent if not paid by 5 p.m. on August 31st, unless August 31st falls on a weekend or a holiday, which is the case for 2025. So August 31st falls on a Sunday this year, and the following Monday, which is September 1st, is Labor Day. So in this case, your tax bill will be due September 2nd at 5 p.m., which is a Tuesday.
Thank you very much, Winnie. And now our final commonly asked question. My business personal property was damaged or destroyed in the January wildfires. Is there any relief available? This will be answered by Alanush Sarkisian.
Thank you, Ian. If you believe your property has a damage of at least $10,000 or more as a result of the fire or a disaster, you may qualify for misfortune and calamity reassessment. If you need more information on misfortune and calamity reassessment, please visit our website at assessor.lacounty.gov as well as you can call us at 213-974-8658 or email us at relief@assessor.lacounty.gov. That email address again is relief@assessor.lacounty.gov. Thank you.
Thank you very much, Alanush. And that concludes our commonly asked questions portion. Now I will begin answering questions in the chat that were not already covered. The first question that was submitted was, I have not received the Form 571L. How do I obtain this? Alanush, would you be able to provide some insight?
Of course, we have blank forms in our website. If you go to assessor.lacounty.gov and go to the forms section, you can find the form called 571L. That's our business property statement. You can download a fillable version, or you can download a blank version and you can fill it out. If you are qualified for e-file and received property statements before, and you need to retrieve your PIN number and you didn't get your property statement, please call your respective office and they will be able to help you to retrieve your PIN number. Thank you.
Thank you very much, Alanush. And a reminder that if you have any questions that were not covered in the commonly asked questions or in the presentation, I encourage you to submit that question in the Q&A portion, which is shown at the bottom of your screen. You'll see a speaker bubble with a question mark in the middle where you can answer your questions. And while they're being typed in, we'll have our panelists answer the questions. We'll read aloud the questions and we'll also have them read aloud the answers that they provide. The next question that was submitted asked, it will require the PIN number to file it online. So if we download a blank business property statement online from the website, can we only submit it via mail? This question will be, Latoya, would you be able to provide some insight into this question?
Yes, Alanush did cover that response in her question as well. So just a reminder, if this is your first time filing with us, or if this is your first time having an account with us, I should say, most of those individuals will not have a PIN and they must submit the form via the US mail. We also accept these forms by email to business PP. So that stands for business personal property. So business PP at assessor.lacounty.gov. So once again, that's business PP for personal property at assessor.lacounty.gov. So if you're not able to send that via US mail, please email us a copy. But yes, if you don't have a PIN number on your form, or if you need to download one from the website, always give us a call. It's a quick call. You can ask the appraiser of the day for your PIN number. And if they're not able to retrieve one for you, then yes, you must submit that form via email or US mail. Thank you.
Thank you very much, Latoya. The next question that was submitted is, how do I remove property that I have obtained in previous years? Frank, would you be able to help us answer that question?
Definitely. I think this was mentioned before in our overview. So if you have property that you disposed, remember to dispose it in the year that it was acquired. And I think the example that was given, if you acquired a piece of equipment, let's say a computer in 2015, you would go back to the 2015 year on your return and make the adjustment. So let's say you have 10,000 of acquisitions in 2015. You got rid of a computer that cost you 2,000. So you would remove that 2,000 from that 2015 year, and you would just report the 8,000. Another thing to note, which is very important, is if you have disposals, make sure you account for them on the form. Because if you fail to do so, you're basically going to be paying tax on something you no longer have. So it's very important that you regularly, do inventories to your property and remove anything that's not there. Thank you, Ian.
Thank you very much, Frank. The next question we have is, will computers that are older than 7 years still be subjected to personal property tax assessment? Alanush, would you be able to help us answer this question?
Ian, sorry, I was typing an answer and I didn't get the question. Can you repeat that?
Oh, yeah, of course. Well, the question, if there are computers that are older than 7 years old, will they still be subject to personal property tax assessment?
Yes, you have to report any business property, including computers or any kind of other business property, even if you're thinking they are old, but you have to report them, all of them, on your business property statements. However, keep in mind that we have trend factors that reflect depreciation. So the respective assessment would be reflecting the depreciation on any kind of equipment, be it computers, machinery equipment, or any other kind of business property that you are reporting to us. Thank you.
Thank you very much, Alanush. The next question we have submitted is, we have purchased machinery and equipment, but have not placed it in service yet. Are these reportable? Calvin, would you be able to expand upon that?
Yes, thank you. It's all based on lien date and the location. So if you control, possess, or own the asset that you purchase, even though they are not put in service, but you have that on lien day, January 1st, and also in Los Angeles County, then you need to report it to us. Thank you.
Thank you very much, Calvin. The next question is, do we have to pay property tax on leased property? Angel, would you be able to help us answer that?
Yes, so yes, you do have to pay the property tax on lease property, but both the lessor and the lessee should report the equipment that's on lease as of January 1st. And that's a way that we won't double assess you. So in the 571L in the business property statement, there's a section on there that allows you to add all the detail of who the lessor is, their contact information, and then some details on the lease as well. And then that helps us send it to our leasing department. So then they contact the lessor and there's no double assessment on the same property.
Awesome. Thank you very much, Angel. Next question. Will the PIN be the same as the one that was made last year? Our PIN name. Would you be able to help us answer that?
Sure, yes, the PIN, it won't be the same every year, it changes, but you can always retrieve the PIN when you go to E5, click on Forgot PIN, and then it's going to ask you 3 questions: 10-digit company number. If you have a headquarter in branches, just headquarter company number, headquarter mailing address, zip code, and headquarter site as location, street number. And in that case, you can just log in and have access to file the property statement.
Thank you very much, Arpine. The next question is, if a business owner has more than one property, can both of the properties be filed on the same return? Financials are combined as well, which would provide the detailed costs. Alanush, would you be able to help answer that?
As a matter of fact, they are also asking if the property locations on those 2 properties that are in the same tax rate area, because I answered to this question that we would prefer for properties to be reported separately. In case, let's say they are in 2 different locations, we want to make sure that all the proceeds of property taxes are allocated to various districts that the properties are located. There was a following up question that if they are on the same tax rate area, then you might just choose to report them combined, but please put on remarks for us that you're reporting for 2 locations and indicate which ones are the locations. So we will make sure that we understand you're filing for both locations. Thank you.
Thank you very much, Alanush. The next question we have, is once we submit the 571L form online, can we amend it afterwards? Chelsea, can you help us answer this question?
Yes, at this time, once you submit the e-file, we are not able to edit it or make any revise on the e-file that already submitted. So in that case, we will suggest you to print out the 571L in the paper form and then file handwriting or type it, send it in a paper form. You can bring it in person or you can also email it to us. And as I mentioned earlier in the PowerPoint, it would be good that you put a note saying that it is an amended copy. So when we receive it, we know which one is the original one, which one is the amended one. Thank you.
Fantastic answer, Chelsea. Next question. If asset disposal done in prior years and was not reported in the year it was disposed, can this be reported to the current filing as a reduction of the value for the particular year it was purchased or acquired? Arpine, would you be able to help answer this?
Sure. Yes, you can just deduct the cost of the acquired equipment in the year that you bought the equipment, basically, and then will be deducted. Thank you.
Thank you very much. Next question. Even if they charge us for the tax amount, isn't that considered double taxation? This question, and Angel, would you be able to help us answer this question?
Yes, I think this was a follow-up question to the prior question regarding the lease equipment about double taxation. And just to reiterate, you would just report who the lessor is as well, and both the lessor and lessee will report the leased equipment. That way, our leasing department can make sure there's no double assessment on that exact same equipment.
Thank you very much. So this next question I see right here, can we get some clarity on the property on two different locations question? I believe Latoya, would you be able to kind of expand upon what's being asked here?
I'm sorry. I'm like Alanush. I was actually responding to another question. What was the question again? I'm sorry.
Yes, I believe there was an earlier question regarding property in two different locations.
Oh,
And I
yes,
believe they're
yes.
looking for a clarification on that.
Yes, Alanush did address that in her response. So yes, if they are in two separate tax rate areas, the way the taxes are paid and distributed, you definitely want to report those separately. However, there are certain circumstances that we do allow the composite filing. You may want to contact your district office to get some clarity on that. But typically, yes, we would like for the filings to be separate. And also while I'm on the line, someone was asking about, and I was going to respond, but I jumped on, so I'll answer it live, about fully depreciated equipment. So that's a very good question because, so accounting, books and records, and assessment for tax purposes are two separate functions. So for tax reporting purposes, property tax, you want to report all equipment, even if it is fully depreciated on your books and records. Please report it to us, and we do have our minimal assessed threshold, which is very low. So if something is really old and it holds no value on your books and records, there's still a small portion that will be assessed for tax purposes.
Thank you very much. The next question we have reported is regards to capital leases, and that is, what is the best practice to report them? Whitney, would you be able to provide some background on this?
Yes. So with regards to capital leases, I think usually there are two types of leases, a capital lease and an operating lease. So you would report them the same way on our property statement. And it's in part 3 of the 571L form. And I think the question for capital leases is that at the end of the capital lease, typically the lessor, the ownership would transfer to the lessor, and for operating leases, the ownership transfers back to the owner of the equipment. So And that does make a difference on who may get the tax bill. But that information that you report on part 3 of the property statement will be sent to our leasing section, and they will make that determination.
Thank you very much, Winnie. The next question I see is, does the PIN for online filing differ every year? I believe this was answered, but if not, if there's anything more to clarify, Elanush, would you be able to provide some more context?
Yes, the PIN number is changing every year. If you receive business property statement through e-file and you report it by e-file, your e-file PIN number every year is changing. If you don't know your e-file number, contact the office or the e-file information that was provided you during the presentation, and they will be able to retrieve your e-file. You can also go to our e-file section and, just like Arpine explained, answer I think 3 questions and retrieve your e-file number for this year. Thank you.
Thank you very much, Elanush. Next question we have is, we have reported a leased appliance in previous years as a new lease, but did not specify it as a renewal. How do we remove the previous year's leased appliance from the report? Calvin, would you be able to help us answer?
You can update it in part 3 of the statements. Also, you can put it in the remark sections. At least we can start investigation. So we won't be double assessed. Normally, in part 3, you can delete the previous one and update the new one. Thank you.
Thank you very much, Calvin. And this next question actually ties into Calvin's previous answer. Where do you put these remarks? Latoya, would you be able to direct us to the right location?
Yes, on the right-hand side, the bottom right-hand side, on the back side of the 571L, there is a section for comments. And also the individual also asks about e-file. There's also a comment section on the e-file. So if you navigate through the online portal, you will eventually run into the comment section where you can add those notes. Thank you.
Thank you very much. The next question I see is, on leased equipment, who is actually assessed, the lessee or the lessor? I believe this was covered earlier, but Frank, would you be able to provide some more details?
Sure. Well, one thing that's important to note is the lease equipment is accessible regardless. It just depends on the type of lease. It can be assessed to the lessee, which is the person in possession of the lease, or it can be assessed to the lessor, the owner of that equipment. So, and again, as mentioned earlier, it depends on type of lease. Operating lease, you're basically leasing it for a certain period of time, and the ownership reverts back to the lessor, who is the owner of the property. In that case, the lessor would be the one that's assessed. If it's a capital lease, you intend to acquire that equipment at the end of the term, and that would most likely be assessed to the lessee or the business owner. Sometimes in the contract, well, mostly all the time in the contract of the lease, it'll say that the lessee is responsible to property taxes. So it's possible that we assess the lessor since they have ownership, but they'll in turn bill the lessee in the monthly payments. Thank you.
Thank you very much. The next question I see is there a specific form for hotels or motels? Elanush, would you be able to help answer this question?
Yes, besides 571L, there is a specific form for hotels and motels, and you can find that form on our website as well. It's called a schedule for hotels and motels. While we are in this session, I'll try to find the link and send it to the person who's questioning it too. Thank you.
Sounds good. Thank you so much for that. Next question we have, when we establish a new entity or open a new store, what is the best practice for informing you to ensure we receive the appropriate bill or form next year? Could you let us know the proper timing and method? Elanush, would you be able to help expand upon this?
Ian, the question was what? Sorry about that.
No, sorry, it's okay. So when a new store is opened, what is the best practice for informing you to ensure that they receive the appropriate bill of form?
Got it.
And could you also add some insight into the proper timing and the method
Okay.
of
If
receiving
you
that
did
bill?
not receive a business property statement from us, or you have not been visited by one of our field canvas appraisers, the best way for you is to download a blank business property statement from our website and report your acquisitions on the respective years and send it to us. As well as you can contact any of our business district area offices and ask them to help you to either download the file, or if you need further explanations, they can assist you. Also, you can watch our how to fill out a business property statement video on our website too.
Thank you very much, Alanush. Next question we have is, we receive bills, both unsecured property tax bills and secured property tax bills. We are leasing the property as a business office. Why do we need to pay the secured property tax when we don't own the property? Latoya, would you be able to help answer this question?
Yes. So you shouldn't, if you don't own the actual real estate, the building, you shouldn't be liable for the tax bill. So you definitely want to get in contact with your property owner, your landlord. Possibly it's just mail that they're receiving there. But yes, if you're running a business and you don't own the building attached to it, then you should only receive an unsecured property tax bill, like you mentioned in your comment. However, if you own the business and the business, the real estate that the business is at, then at that point you can add on those unsecured taxes to the real estate bill, and then you can only receive one bill, which would be for the real estate and the business combined. But it sounds like you do not own the building, the real estate. So you should only be receiving an unsecured property tax bill for your business equipment. So yes, definitely get in contact with your landlord to forward them their mail. Thank you.
Thank you so much, Latoya. The next question is, how do you put the value of the equipment that has already fully depreciated? Angel, would you be able to help answer this question?
Yeah, so you do not report the depreciated value, you just report the original cost, the original acquisition cost. And then we here use trend factors to bring it to the correct market value.
Thank you very much. Next question. If we have moved some equipment furniture from one branch in Glendale to another branch in Upland, how do we report in our 571L form from Los Angeles County and the other in San Bernardino County? Alanush, would you be able to help answer this question?
Yes, sure. You have to remove the cost associated with that piece of property and put on the remarks that the equipment was moved to another county, and our appraisers and staff, if they have further questions and they want you to send them a proof of filing a statement with another county, they will contact you. So your contact information and the remarks will be helpful for us to make sure that we get the correct assessment. Thank you.
Thank you very much. Next question I see is, when a capital lease is up, do you move to Schedule A? Winnie, would you be able to help us answer this question?
The short answer is yes, and I probably made a mistake earlier saying about the end of the capital lease. I just want to clear it up, but by the end of the capital lease, the ownership transfers to the lessee, and for an operating lease, the ownership transfers back to the lessor. So If you now, at the end of the lease, you now own the equipment outright, then yes, you would move it to Schedule A and report it as your own equipment.
Thank you very much, Winnie. The next question we have is, do we need to submit a supporting document as proof of disposal with the current 571L report if we decide to reflect the prior year's disposal in our current filing? Latoya, would you be able to help us answer this question?
Yes. So if it's under Schedule A, which is under machinery and equipment, office furniture, tools, a computer, network equipment, that type of equipment, we typically don't need any kind of a supporting documentation. But I will add that if it is drastic, if you went from, let's say, 2 million and then the next year, you're reporting 50,000 or something like that. That seems a little unusual, if you're not closing the business. So if it is something extremely drastic, you may want to leave a comment, giving us an explanation on why you got rid of pretty much all your personal property. So that's for Schedule A. That's the top section. Once again, machinery and equipment, office furniture, tools, computer, network equipment, that type of equipment, typically no, unless it's unusual. However, on the bottom portion, which is Schedule B, leasehold improvements, and that structure or fixture, just kind of basic fixture would be like your signage on your building. If you're removing that sign or adding an additional sign, yes, that section you are required to give us more information on the date of your disposal or the date of your acquisition. So you would have also received Schedule D in the mail, or if it's e-file, you still have Schedule D. D is in dog. And that schedule is where you can actually provide us the details on the disposals of your structure and fixture items.
Thank you so much, Latoya. I really appreciate the answer. Next question we have is, do we need to include all of the purchased laptops? Winnie, would you be able to expand upon this?
Yes. So whether it's laptops or desktops, you will report all of them on the property statement in Schedule A, and this is going to be Section 5A for personal computers.
Thank you so much. The next question we have is, I received an audit letter last October and submitted all requested information, including additional details, in December. Could you let me know how much longer this process is expected to take? Chelsea, would you be able to help us answer this question?
Yes, the audit processing time varies, depends on a lot of factors. So if you want to do a follow-up on your audit finding, it is best to contact the same auditor that who requests information from you. Because if you reach out to other auditor or other appraiser, they might have very little information. Most of the time, the whoever handle the case would have your complete information. So it is please best to contact whoever requests that information from you. Thank you.
Thank you very much, Chelsea. We have another capital lease question. It just says, in the same year the capital lease was established, ? Calvin, looks like you had an answer. Could you expand upon it to the rest of the group?
Sure. Usually you need to report the manufacture year. If the equipment is manufactured in 2018 and you acquire in 2020, or you lease from someone starting 2020, to assess it properly should be you should report in 2018. If you're not sure about that, you should also in the remarks section or in part 3 that you should indicating the manufacture year and acquisition year, so to help us to understand the situation. Thank you.
Thank you very much. One of the attendees here noticed on the Form 571L that on the top right corner, they have a route, situs, and company number. Angel, would you be able to explain what these are?
Yes, so the company number is, if you're new, the Office of the Assessor will create one for you, so you don't have to worry about that. And for the route and situs, we'll create it as well, so you don't have to worry about it. And it depends on what your business location is at, but that's internal use, so you don't have to worry about it.
Thank you very much. Another commenter asks if the personal property is worth less than $1,000, will they still be subjected to a tax? Alanush, would you be able to help us answer this question?
We have a low threshold of $5,000 of value. If your property is valued less than $5,000, there will be no tax bill associated with it.
Thank you very much.
I'm sorry, Ian. I'm talking about $5,000 value, cost, I'm sorry, not value.
Thank you very much. And I believe I misspoke. It was $100,000 in the question.
Oh, the
Yes.
100,000 that we are specifying is for filing a business properties form. When we are saying if you own, possess, or control an aggregate cost of 100,000 and more, you should file a business property statement. That's a requirement for filing 571L or related statement. However, it doesn't mean that if you own less than $100,000 of assets in your business, you will not be assessed. As I explained, the low threshold is $5,000.
Thank you very much.
Sure.
That was on me. Next question we have is, when I report the property value, do I need to include the sales tax and shipping costs into the reported value? Latoya, would you be able to help us answer this question?
Yes, that is correct. So that'll be considered the full cost of the equipment.
Thank you very much. We have one follow-up question that says, the bill shows billed to our company. How does LA County recognize our company as a property owner? We've been paying the bills for the past 3 years. If we were not liable for the bills, could we get a refund for the money paid? Latoya, could you expand upon this?
Yes, this is going back to the same response. This individual sounds like they have a complex situation. So I'm looking at the Q&A now. They're actually getting information for their local assessor's office. So they should definitely contact their local office to get a little bit more, so they can provide some exact details, and the appraiser can give them a more direct answer.
Thank you very much. We have another attendee who is closing their business in the summer. Do they need to file and pay next year? Alanush, would you be able to help answer?
If any business business entity is not located in LA County as of the lien date, which is by 1 a.m. January 1st, 2026, then they don't own any business property, equipment, machinery in our county, they are not liable to file. However, we would advise them to contact the respective office and let them know, so that we will be clear why they are not filing, and we will close their account properly when the time is correct.
Thank you very much, Alanush. And looking at the time, it looks like we'll have time to answer 2 more questions. If we don't get around to answering them, we will be posting this webinar with the questions and answers included on our website. We will let you know at the very end of the presentation. But the next question I see is, how do you determine audit periods? Calvin, would you be able to expand upon this?
Yes, the audit period usually cover 4 years. It's from 2021 to 2024, but we go by the lien date. So that's just when you see the property statement, if it's 2024 or 2021, those are the years that we cover. You'll be audited.
Thank you very much. Now for the final question. What is the minimum amount of an asset that needs to be reported? For example, we have chairs that cost less than $100. We typically don't include these as assets. We expense those. Latoya, would you be able to help us answer this question?
Yes. Once again, all property does need to be reported, And if you don't have the exact data, you can always give an estimate, but yes, all property needs to be reported. And while I'm on, I was going to answer a question live in regards to the individual, I think that's transferring property out of the county. So if you're filing online and you want to remove that asset from LA County, go ahead and edit the year it was purchased. So edit that amount. And when you report it to the other county, you're still going to be reporting it for the year you purchased it. Because if you say that you purchased it in 2024, then they're going to consider it higher value. So you definitely want to tell them the year that you purchased it. Thank you.
Thank you very much. And that concludes our virtual business personal property statement webinar. We thank everyone in the audience and our assessor team for coming out to ask and answer questions. I encourage everyone in our audience to visit our website, assessor.lacounty.gov/business owners, to enrich your knowledge of the business property statement form. On the left of the page, you will see a list of topics to choose from, including how to e-file the business property statement, an in-depth look into how business properties assess, and information for new business owners, among other useful topics. You can also schedule an online or in-person appointment with an appraiser to discuss individual cases. Visit assessor.lacounty.gov/contact to choose from one of the subtopics shown at the top to have your question directed to the proper team. And if you know someone who needs to hear this information, but is not currently present in the webinar, we will be posting this and Tuesday's webinar on the business owners page on our website. Feel free to share with all who need it. Thank you once again for attending, and we hope to have you back for another one of our presentations. Thank you.